Hi folks, Lee Gettess here with the Market Sense for the week of December 4th, 2018. The charts in this presentation are provided to us by the Trade Navigator software. That's from Genesis in Colorado. This is the weekly bond market, but let me start off by saying we have an unusual week here. They've decided to keep the markets closed Wednesday in honor of President George H.W. Bush. That's fine, no problem with that. But it's hard to know how that might affect how things could react because they've had a very volatile week so far. So we're going to discuss them as if they're open, but they may be in a different zip code Thursday, and we might look completely foolish. So just we know that going in, we're going to talk about them as if they're open. The bond market here actually opened substantially lower this week. We were kind of looking at the I want to say 139.25 area as being support for a potential blowout to the upside, and instead they opened already below that. But didn't take them long to turn and start rocketing up, and they've blown through everything. The resistance here is around 140, 24, 26, roughly there. Doesn't matter. It was a long time ago. And they've just blown right up, which, we suggested they might be based on their price pattern coming in. Hard to know exactly where this might go from here. They tend to go a lot further than anybody expects. The only other linchpin we can look at is the upper Keltner channel, which is up there above 143.20. That's this pink line up here, 143.20. That's about the only thing we have to look at, and I wouldn't call that resistance necessarily, just a target. That does kind of coincide with swing highs back here, so it might be an interesting area if they get there, but market this strong, there's nothing to sell into it. They've blown out of this little pattern to the upside, and just a matter of seeing how far they go. I don't think I want to step in front of this, and it's too late to buy them, really. Stocks did the opposite of bonds in that they opened higher, but they didn't open above resistance. In fact, the projected high here was around 2809. It went a little bit through that, but not much considering the size of the moves here. And there's one of two things here. The support for the week was right in the 2708 area where this middle green line is. That's what we would have thought support would be coming into the week. Well, that's what they've gone to, so nothing really bad has happened yet. The only thing that makes this look bad is the fact that they were already up here early in the week and they've fallen more than 100 points in just 2 days. That doesn't look good at all. So we got to see if they can hold in here or if they're heading lower. If they're heading lower, wow. 26.43 down here at the lower moving average is a distinct possibility. And I have to say, Tuesday's price action did not look like a climax, really. Now, again, not being open Wednesday kind of changes how the market might behave, and I don't know how much of the selling was just due to people not wanting to hold them over the off day. But it wasn't a classic sell-off looking, capitulation move, people like to call them. It didn't look like that, really. So, I think they might go lower, but at this point, they really haven't done any damage. They've only dropped down to the support that we would ordinarily be expecting this week. So this will be fascinating. We can't do anything Wednesday, and who knows where they'll be Thursday. So I really feel kind of locked out of doing anything for the rest of the week. But it'll be fascinating to see. As long as they hold without going too much lower than where they've been so far, there really hasn't been any damage done yet. So that's what we've got for you today. I hope you can find something profitable to get you